The first started recording. Very good. Well, good afternoon, everyone. Good afternoon, Naveen. Thanks for coming to this tutorial. In a minute, we are going to go over paper 1 and paper 3 of the qualification. Before that, I want to add something that to talk to you why I am so keen on promoting insurance itself, and why I'm so keen on recruiting a new team of international financial planners. But to be very honest, I had rejected insurance in my early days of my life, and I was an executive in the bank. I think that I'm well covered. I do not need any insurance. The bank provided them a very good medical inpatient services, so I talked to the financial planning agent that I do not need. I did not need any insurance at all. I can invest better than the insurance company. I'm well covered. But at that time, I never realized that one day I would leave the bank industry and nothing covered. I joined insurance in my age of 45. And at that time, I was busy doing my insurance business, and I buy a lot of insurance. At that time, while I'm an age, I was an agent. But all of them are savings products. Because I worked in China, and I think I do not need any medical cover or critical illness. In fact, not at all. When I returned to Hong Kong, self-employed, doing my own ministry work, I suddenly find that I no longer eligible for insurance. And because right now I have a large gap in these two areas. And without any insurance covered, medical cover, critical illness cover, that left my family vulnerable. If I'm sick, if I am cancer, then they have to worry about me. So I will never repeat that life again. So if in insurance, I remember very vividly that when I left HSBC at my age of 47, something like that, sometime like that, I decided that I should pursue a life insurance business, starting from taking new grounds again. And why did I have the courage? It's because on Monday I received a letter from the company saying that because of my whole life insurance that I bought some 20 years ago, at that time I have $1 million in my account. They give me security. They give me comfort that I could afford to start a new ground. And today, why are we still in insurance? Why is this COVID everywhere? Why is insurance slowing down from China? I still believe that Hong Kong market will be the first to recover after the COVID period. And it's time for us to invest our time and effort in developing these new skills and acquiring new knowledge to prepare ourselves for the new COVID period. So, Naveen, I'm very pleased that you are considering joining the financial team and taking new grounds for yourself. I think that if you made enough effort, you will never regret joining this industry. And it's a good industry for yourself, for your family, and for the people around you. And 2 days ago, I had my client, because I rejoined AI in Hong Kong for 2 years. 2 days ago, one of my clients called me up at almost midnight. I'm going to the hospital. How am I covered with my insurance policy? And she was asked to consult a doctor and go to the hospital for some high investigation. She was very about the medical cover. And I think that moment when I told her that how much is covered and to what extent she could get the reimbursement, I feel that I'm doing her a very good job. And it's a moment of reward and satisfaction for me that I'm creating some good values for my friends. And find who supported me when I first after my first 2 months. You refer volunteer to place a cost of their age. He did not refuse me, she accepted it very quickly, and I owed her a favor that I'm so glad that I was able to help her by filling in the information and telling her what to do, the procedure, the claim procedure. Then insurance is something that gives protection to people when they do not think it's necessary, or they do not need it, or when they need it. It's really a good advantage to them.
It's amazing.
Yeah, as stories of this kind that motivate me in this business. There are a lot of businesses we can do. We can do many other business, and my wife always telling me that, no, Augustine, you don't need to worry, you must retire, and it will give you happier. And I am fully convinced that if I give up my life goals, give up my meaningful work in insurance, I will probably die very soon because there's no hope, there's no future,
Right.
nothing to devote my time on, and nothing to realize my lifelong values. For me, insurance is my lifelong values. Insurance development team is my goal. The precious time that I want to devote my time on. Today, because this tutorial was organized before you approach us, it was organized for a candidate who once failed in the first attempt of his papers. But I'm so sad that he said that I'm not coming because I'm enough time just to test it out, and it didn't work for me. So there are many people like him, like her. But I think it's good if they realize what they can do, what they should not do. It's good even for her. And I'm only able to help those who want to help themselves. And so I decided that if no one comes today, I will still go on with this presentation, this recording, to help others who might need my help and who might benefit from changing a life field and prospering in another better view of that. So I'm recording means to develop good, talented people to become a leader in insurance business. And I think, and I'm convinced, we need English-speaking people in this market. There are lots of market to grow the business and to grow and give help. I hope so. And that's why we're here.
Great.
And I hope this presentation will help you to pass. First tip.
Thank you.
We have 2 papers to pass. Paper 1 is Principle of Practice of Insurance. I think it's important if you're entirely new to insurance. I'm going to give you this background. And this paper has 75 questions. The distribution of questions is something like this. Principle of insurance, 30%. So there are, out of the 35 questions, 70%, 30% of the questions will be from testing you about principle of insurance. And 21% about regulation of insurance industry. And 16 to 12% on the risk and insurance. And this is a must extend area, the mandatory area. It's easy. So you can pick up this 12% questions easily because the questions are so simple. Easy to pick up this 12%. And the legal principle is not very difficult. I think the most difficult part is the principle of insurance. These regulatory framework is just knowledge that you can learn from it. It's nothing very tricky. But this principle of interest is something that is maybe it's new to you. The tactics to attempt the search is to spend more of the time on section 3, principle of the insurance. Let me see if I'm recording. I should be recording. Just double check. Yes, I'm recording. Then go to, I think the red ones, the conceptual ones, we'll go over it in this tutorial. But the regulatory framework is so straightforward, so don't understand me, because it's asking you what IE is doing, what the other FI is doing, what's the difference in broker association, the insurance association, that kind of technical knowledge. What I would do is I go over the principles, the first 3 sections, and leave you to study that, and I'll go over one full sentence. As I'm going to do in 1.5 hours for this. People want. You know, the questions will be random asked from a library. All the papers will be bilingual, so you have no problem understanding questions. And the notes, the PowerPoint is a good summary of the syllabus, but you still read the syllabus itself once. All the questions will be coming out from the syllabus, to find their answers from them. But you may not remember all of them. But this study the PowerPoint and then try the questions. And you don't need this page. This page is wrong because you never go to this again. You go to the academy to get I've just explained to you. And if you're taking paper examination, bring your pencil and eraser. There will be multiple questions. You mark the answers on the boxes A, B, C, D boxes, and you change and erase it. If you're taking a computer examination, you're facing a computer, you give the answers to the computer, and you give the results. For paper and pencil questions, it takes 7 days to get John to. And it's cheaper to take paper and pencil examination, but the cost is not high. If you take the computer examination, $400. If you take a paper examination, it's probably 300 something. So these are the really, really easy questions. Risk insurance, type of insurance, type of risk. It's easy to understand. What is risk? Risk is involved in uncertainty and loss. Just remember the two words. If there's certainty loss, it's not risk. It's not risk at all. Let's say that COVID. It is if everyone is getting COVID, it's not the risk. If there's a war, people are going to die. It's not the risk. It's affecting a lot of people. You cannot prevent it. It's creating a lot of losses. It's not a risk. Risk is something that different nature. We have financial risk that can be measured in monetary terms, physical risk of body injury, death, or hurting themselves, a physical risk. Emotional risk, feeling sad, that is not insurable. Not insured. Oh, I'm getting sick. I'm getting we call a certain kind of mental diseases. That's not a insurable risk. If you feel sorry, you feel sad about passing away of some relative, it's not a risk. It's not an insurable. It's a risk. Family members may die earlier than they expected. So the only insurable risk is financial risk and physical risk. The question, the simple asking, is this insurable? And you just find out that this is a financial loss to you. What is financial losses? If you are sick in the hospital, that's financial losses. Your income, pay the medical fees, paid in the doctors, paid for medicine, is a financial loss. You get no pay for from your sickness, so it's financial loss. If you ship some goods to China, to India, and the shipment get lost, you incur financial losses. Only two types of risk are okay. And this new term, peril. Peril is the cause of loss. So insurance uses the word risk, but there are many meanings to it. But in terms of in the insurance business, this risk is associated with this peril. Is very important. And this meaning of this word of risk is very different from other meanings that people use in banking, use in other business. So, classification of risk. And this is a question that you will see in examination. There's something called pure risk, something called speculative risk, something called particular risk, something called fundamental risk. By the cause and effect, we find it is particular or fundamental. Fundamental meaning that there's a war, there's a riot that have a lot of people, hurting a lot, impacting a lot of people. Particular risk is particular to a person, particular to something, some good. This is insurable. Pure risk is insurable. The speculative risk, like stock market ups and downs, is not insurable. Whether you can create success in your business is not insurable. Whether you can be a good financial planner, bad financial planner, whether you can be MDRT or not an MDRT is not insurable. It's very speculative, and the third is not a pure risk. Well, look at the definition. So insurance company only take care of pure risk and not deal with investments and business risks and other economic risk, trade risks, and other things, not for insurance company. And for managing the risk, there are people like a research company, like the governments, that risk management consultant, which do help you to analyze the risk, do the research on risk, but they are not insured. Only insurance company can insurance on pure. What insurance business do is to transfer the risk from the individual, from the company to the insurance company. So we take over the risk. The benefit of this insurance company, it is a function, it's a social function which helps employment, direct benefits employment, is a part of the financial services. So insurance, securities, banking are the three major branches of financial services. It helps economic development, promote savings, investment for the country, and it helps prevent loss and reduction in costs. These are the five functions. The questions will ask you whether or not these are the direct benefits, and gives you some fancy ideas that you will help the country recovery. Is it this function? No, this one. So you understand only these five functions. Of course, insurance benefits are more than just five functions for the individuals, not promoting employment or the financial planners, if helping people to transfer the risk to the insurance company. So give you some taste about the paper. What's a very simple question? Risk is described as uncertainty concerning potential loss, and the loss is not all of the above because emotion, no loss. So your answer is only financial loss and the emotional loss, physical loss.
On those, you can do either, or you have to do both.
You have to find the best one.
The best
uncertainty with the potential loss may be all above is not correct.
It's physical or financial.
Physical or financial. But this question, I don't know. I do not know which one they will present. I think it's financial. The actual potential loss may be financial loss. I think B may be the answer. Let's check the answers. Some risks arising from sorrow without involving financial loss, they are unlikely to be insured. It's not always insured. Frequently insured is not by cost. Unlikely. Emotional loss, I'm not including. Well, that's simple. If you understand the concept. But we'll get to those questions later. Which are the following risks are insurable? Pure risk and particular risk, 1 and 2. So give you multiple choices. Something to confuse you. But if you know the answer, only 1 and 2. Very simple. But you need to. As a separate from risk management is perceived as speculative risk. Insurance can be one of the alternative. Very tricky. As a separate field of knowledge, risk management is perceived is part of insurance. Is the answer. Right? It is not. Has no relationship. This is not the other. The gift process is part. Risk management is part of insurance. Because insurance underwriting is risk management. All right. Legal principles. Very simple. We need to know law of contract. Do you have any knowledge in contract law? No, nothing. This is new to you. Okay. In a contract, there are two parties. Principal and an agent, and a third party. Principal is AIA, is the insurance company. Agent is financial planners. Third party is the customer. So it's a contract, insurance contract is a contract between these three parties. Okay. What is a contract? The technical thing, the thing you need to know, it's a legally enforceable agreement. If you promise me that you will be present in this meeting, you do not show up. It's not a legal contract. It's something of your conduct and moral standard. You break your promise, but it's not legally enforceable.
Sure.
So the key word is whether it's legal. I can sue you for loss because you did not show up. I can talk about financial emotional loss is not insurable. So not all agreements are legal consequences. If I invited you to lunch and you promise and you do not show up, it's not legally enforceable. But if you take a newspaper from the newsstand and you do not pay, then it's legally enforceable. They can sue you for that.
Right.
That's the basic idea of contract. So contract is a party expected to promise to be honored, and the consequences will be imposed on the party. Otherwise, if we do not honor the contract, they will seek for compensation or enforce comply. The court issue the compliance order that you must comply because you promised to pay a certain amount of money for the receipt of goods. If you do not pay, the court will force you to comply. So there is a forced performance or demanding compensation. There is a consequence by breaching the contract, enforcing the contract. This is the basic idea. So a contract can be set up verbally. You do not have to sign in paper. It can be written or can be sealed under seal, executed under seal. And by conduct, if you take the paper, newspaper from the newspaper stand, there's a contract. The contract is not by signing, it's not by verbal, it's by the conduct. If you go to a restaurant and order some food and you do not pay, and it's your breach of the contract because it is implied that you must pay for your food, not by verbal commitment, written commitments, by conduct. Conduct is inferred from conduct is a legal contract. Insurance. Most of the insurance contract do not have to be evidence in writing, theologically, but technically, everything insurance contract must be signed. Something like a mortgage, like a transfer of land, ownership of land, that must be signed in paper, otherwise it's not legal. A will is a contract, but it doesn't have to be signed in writing. A will, when you die, you want to pass it in your fortune to your family. Okay. That can be expressed verbally if there's a witness, two witnesses. There's a legal contract. Right. So elements of contract, in whether to judge whether it's a contract or not, there are elements of it. One is there must be an offer, there must be acceptance, there must be a consideration, some value to be transferred. The party to it must have a capacity to contract, and the contract is legal under the rules of law, and everyone has intention to create that legal relief. So 6 conditions are necessary, and whether this is a legal contract or not. So in an insurance contract, for example, the insured made an offer. I'm the agent. I'm between this insurer AIA and my customer, and you're my customer. I'm in the middle. And you need a financial intermediary. And I invite you to sign an insurance proposal by filling up a form, filling up some information in the computer, and you become the intended insured person. Then you made an offer to AIA. I offer my insurance policy to you for this amount that the quotation that Augustine has given me. For $10,000 a year, you will provide me with medical cover up to this amount. Right. You made an offer. You are the offerer. Right. But this company, it will look at your health conditions. Call the process called underwriting to assess the risk of the health conditions, and then he will accept your offer, saying that tell Augustine that this insurance proposal is accepted. Hey. Right. And then I'll tell you that your insurance is okay. Please pay the insurance premium. And if you pay, and after the insurance company receive the money and give you the contract, and the contract is legally binding you. Right. So pay attention. This offer and acceptance position. The insurance company is acceptor. It's the offeree, the person who accepting the offer. Right. But the insured is the proposed person, is the proposer, is the offerer.
Right.
And the insurance company may say that no, your health condition is so bad, I won't take your proposal. So you can refuse it, and there's no contract.
Right.
They can counter-propose it. Now, if you pay because you have diabetics, if you pay double interest premium and accept your insurance, make a counter offer.
Right.
The counter offer is given to me, then I'll show you, okay, this is what the company say, the health condition is so not so good. They will only accept you after you pay the 50% loading,
Right.
Extra premium. And you refuse. Oh, no, my health is good. This counter offer is unreasonable. And you made an objection. And you say to me, I will not accept your counter offer.
Right.
And me, as the minimum, say, talk to the insurance company, well, is there any other further tests you can do to prove his health conditions? That's comes very often. So the insurance company try to say, okay, if you take this additional test and prove that his health is correct, I will accept it.
Right.
And then I will convince you, please take this test. I take you to the center test, and then the test result is good. And I show the company, okay, now my test result is good. So okay, I will withdraw my counter offer. I will accept your original proposal. That is the back and forth. And the consideration, what's the consideration? It's paid by both parties. You pay the premium and can promise to pay the premium every year for 20 years. And this accept give you the protection, the reimbursement, the coverage, and this is the consideration. Both parties.
Right.
Okay, the considerations is to pay the premium, the promise to pay the premium. He can promise to compensate you on the terms of the terms of the insurance. The consideration being changed by the both parties, legally binding contract. But you and I, the insurance company, has to have the capacity contract, meaning that you cannot be a minor. Minor under 18 years old cannot sign, or you are a person of insane, some some mental illness, you can assign the proposal.
Right.
And mentally disorder minors can assign, and the insurance company must be a legally authorized insurance company in Hong Kong.
Yeah.
So if you buy an insurance company from America, for example, they have no jurisdiction rights to offer a company in Hong Kong because it's not governed by Hong Kong laws. And the contract may not be enforceable. Right. And that if you're less privileged, if you buy overseas.
That policy that can be worldwide. I guess medical can be some of them.
Well, the contract has to be valid, legally valid on the city, on the jurisdiction that is assigned. The American company is signed, and America is a valid. Protection is worldwide, is no problem. The contract must be legal.
The contract, right? Okay, I got it.
If I sign a contract with my client in Shanghai, while she's in Shanghai, he or she in Shanghai, even she signed, it's not legal. Right. And not entitled to the coverage benefits. The contract is voidable.
Right.
Can be void by the party. So legality, the contract must be legal. You cannot use smuggled money or smuggle goods, commit any crime. You take the money from theft, stolen money from the jewelry stores, and realize the cash and put in the insurance policy. The policy is void. Also, is legal and is not legal. So everyone has to have the intention to create legal consequences. Intention is very important. So there are three terms. Void. Void means invalid. Voidable meaning that either party can rescind the contract. Reasonable time after acquiring knowledge available of such rights of re-election. Agreed party to the contract treats it as void. Can be void by either party. It's voidable. Either the insurance company void the contract or the client void the contract. Right. And enforceable, it's not enforced in the court of Right. So three words are important. And the other law is law of agency, because what you're signing, the contract that you sign between AIA and you is an agency. And what is an agency contract? Well, agent is a middleman, in the intermediary between the client and the insurance company. So in an insurance intermediary, there are two types, only two types. Either you are an insurance agent, a planner sign a contract with the AIA as an insurance agent, or you are an insurance broker. The only difference is an insurance broker representing the insured. We are representing the insurance company. We are representing AIA, it is representing the client. So both parties can enforce, can help the customer sign a contract with the insurance company. And AIA has two distribution channels: brokers, insurance agents, and the banks too, as a third financial intermediate. The banks are not a broker, but an insurance agent himself. Okay, and the qualifications of these parts are the same. You have to pass paper 1, paper 3, and but either you join a broker firm as a broker, then you can. What you're representing is only the proposer, the client,
right,
and not representing the IA. And for these, you can, for the client, you can source from number of insurance company and give the proposal to the client. So as consumer choices. But as an agent of the IA, we cannot represent AIA and represent another insurance company. Because as company, you only represent AIA or other companies, and you must express yourself clearly. Now, for this transaction, I'm representing AIA. For this transaction, I'm representing AXA.
So as an agent, you can represent
up to four. But that representation has to be approved by your principal insurer. For me, I can represent and in life business and AIA business.
Right.
I can represent Zurich for general business. I can represent EIG, American International Group for general business. Up to 4.
Okay. And as a broker, you can represent
as many as you want, because you are representing the company, not the insurance company. The broker firm can sign up with all the insurance companies to give them a permission, and the client will know that you will receive permission from my section, from my cover, but you are free to represent, to solicit proposals of different companies and present them.
Right.
All right.
And as a broker, you're also getting commission from the insurance company?
The insurance company.
Well,
yes, and the broker's commission normally is higher than the insurance agent, because the insurance company has provide office, provide training, support to the insurance agents, but they will not provide it at the same time to the brokers.
So even though they're different, and one is supposed to be representing the insurer, the other one's supposed to be representing the order proposer, are they, in practice, is the method of selling the insurance very similar?
Very similar.
Right.
If you're a broker, you will present AIA proposal, AXA proposal, and other proposal, broker proposal to the clients, and these are good things, bad things, about it.
Yeah, it's the same.
The client to choose. For us, we just present AIA, and if the client say, "Oh, I get better deal from Bupa," you analyze the deal and see what areas are stronger than Bupa and what areas were not as good as they are. And we have to convince the client that AI is a viable solution, a good solution.
Right.
To receive training, support, incentive from AI. All right. The law of agency, this term always comes up. So the principal is exposed to vicarious liability. What is vicarious liability? Liability incurs as a result of an act or mission of another. If we incur an action or mission, forget to tell the client something of the EIA, forget to tell the client, impose certain rules on the client, and not tell the client that the conditions of acceptance that AIA is incurring the vicarious liability, and the agent is incurring vicarious liability. because this liability is to the client.
Right.
So that's why for a lot of the insurance policies, the agents present to the AIA, and after the contract is signed, it will make a telephone call to the client saying that,
Do you understand?
do you understand the policy terms? The agents express all the limitations, all the cool-off periods,
Yeah.
your rights be preserved. So to check whether the agent is omitted some of the liabilities to make sure that he is doing everything right.
Right.
This is a way of protecting the company. This is particularly true when the policy incurs some liability on the part of the client. Let's say the insurance policy. The client has to know that it's not guaranteed for the amount. It's incurred investment risk for the policy that we propose to EIA. This is very important. And these terms consider liability. There's omission of action by one party. So the agency relationship is a middleman, intermediate relationship appointed by the principal. This is appointment process. And each party has roles, has rights and obligations. As a financial planner, when you sign the agency contract, you become the agency agreement is signing an agency contract. I implied I appoint you as my representative to talk to this client, my agency. And I have my assistant, who is my agent. I have my assistant. Okay, my assistant is Carrie. She is the person to contact. Carrie helped me talk to this client on behalf of me, helping her to present the claims to AIA. And with this, although I'm delegating him, I am the agent of AIA, but he's my agent.
Right.
Carrie is my agent of agent. To protect myself and protect AIA, Carrie has to have the license that he can qualify to talk to people about it. Otherwise, it's a breach of law. It's not an authorized agent. Represent me as an agent. If my representative to her without being qualified as a the agency agreement can be by ratification. That means after the fact. Can appoint you as the agent after the fact, either by writing or by verbal or by conduct. 3 ways you can appoint me. Okay. Authority of agent. For agent, as an agent, I have actual authority, meaning that's authorized, expressed in the agency contract, and I can represent AIA in these areas. But to you, because you do not know what contracts I have, when I present myself as AIA agent, and you did not check. You did not check with the insurance authority. You asked my name card. I didn't give you my name card. And you believe I'm an AIA agent, then you would deem that I have apparent authority from AIA.
Right.
So mistrusted me. You could mistrust me.
Right.
If I could, then I'm incurring a personal legal liability.
Right.
I cannot represent AXA. I appear that I can represent AXA and EIA. It's not good. It's better. Then I'm incurring a personal liability. But you believe I'm an AXA agent, and is apparent to have my representation of AIA. So authority of necessity is something that is necessary to do. I will have some examples. Result of necessity, urgent situations that you believe that must represent the client and represent the principal in this way by way of necessity, then I have the authority to represent it. Agency by estoppel, that means that I cannot stop by my conduct that I am an agent of an agency. Let's say I quitted. You know me. You knew me when I'm an agent of AIA, but I quitted. I left AIA, and you deal with me. and I did not tell you, I stopped an AI agent,
Mm.
but you will still believe that I'm AI agent, then I cannot deny. The AI cannot deny that the agency relationship rely on past knowledge, and
Right.
you still believe on AI. So that's why very important that AI will, there's a central register by the insurance authority so that which agent is representing which company. The client can check the public domain, even though AI cannot make a public announcement. Okay, this person is bloody company. Sometimes you will see that for business representation, agency relationship, the local, the national brand will announce that this agent in Hong Kong did not represent him anymore. That is to make the clear separation of agency relationship.
Right.
Otherwise, the agent, whatever he does, people will still believe it's representing the principal in the international name, then the party dealing with that agent, my principal cannot deny responsibility. These are the four authorities of the agents have. The authority of necessary reserve and manifest consent made to third party by the principal appears to have a greater authority than actually. So the duties is both sides. The principal will give remuneration, recovery expenses, and the agent will have the breach of duty if they violation the rules by the principal, and the agent has to be obedient, conduct business in the way that AIA requires, exercise due care and skills, loyal and good faith, and have accountability for the agent, and the principal will provide remuneration expenses and breach of duty. These duties imposed on both sides by the two agency contract. Termination can be by either way: mutual agreement, revocation, breach, death, insanity, negotiability, or a period of time. If the time elapsed, the agency contract. We will look at the questions later. Principle of insurance. This will take care, accounts for 30%, so it's an important area. New to this section, okay, there are 6 principles of insurance. One is insurable interest, utmost good faith, proximate cause, indemnity, contribution, and surrogate. These are 4 important. First, insurable interest. I cannot. Well, there are 3 relationships: the proposer, the insurer, and the insurance company, and the agent. So 4 parties insurance contract. The proposer can propose to insure your wife's life to AIA through agent of Augustine.
Right.
Okay, so for 4 parties, you, yourself, your wife, AIA, and Augustine, you become the proposer, the policy owner, irrespective of who pays for the premium. Your wife can pay for it, you can pay for it.
Right.
You're the legal owner because you propose. And your wife is the insured person,
Right.
because he is the object of the insurance. The insurance company is the insurer.
Right.
And Augustine is the financial planner, the insurance agent. And these 2 persons, the proposer and the insured person, the party must have an insurable interest. It means there are legal benefits, legal financial consequences out of that person. And if there is no legal consequence, no relationship, financial relationship between the parties, they cannot have an insurable interest.
Right.
So you cannot insure your friend's life. Buy insurance for your friends because you do not have an insurable interest. You can buy insurance policy for your children because you will suffer financial losses from the loss of children.
Right.
Okay? You cannot buy insurance for your mother-in-law because both are interest.
Understand.
Understand? That's good.
So can I ask you,
yes.
In the case where it's not a minor and it is same age, so let's say it's a spouse, Is there any advantage of the proposer and the insured being different people?
Yes. Yes. You can be the proposer of your life, then your life become you with yourself the insured person.
Yeah.
Then you can be a proposer of your wife, and the wife become the insurance person.
Yeah.
There are legal meaning to that because as a proposer and the legal policy owner, you own the benefits of the insurance contract. And as a proposer, you can change ownership.
Okay.
You give the policy to your father, give the policy, or pledge a policy to financial company,
Right.
for some remuneration. But the insured person or the beneficiary cannot do that. You're the legal owner. And because you're the legal owner, you also incur to certain countries legal liabilities for the policy that you owned. Some benefits for outcome for the insurance policy, like larger dividends on the profits. We call it the some we call it dividends or the profits arriving from the insurance policy may be taxable.
Right.
So it's whether your policy or your wife's policy does make it up.
Right. Okay.
And for example, this insurance policy, you cannot, because you do not have insurance interest for your grandchildren. So you cannot buy a policy for your grandchildren without the consent of your son or your daughter.
Oh, okay.
So your relationship is only directly between you and your spouse and your direct children.
Okay.
But not your grandparents, not your mother-in-law or son-in-law. There's no insurance or interest.
Right.
Right. And the question becomes asked if there is a child that's not your child, not from your original marriage, but from your second wife, and what happened to that?
Right.
And if this your child is from a second wife, whether the legal marriage is not, you still have the legal insured son, despite that it's not your children out of your marriage.
They legally have to be adopted by you?
No,
they don't.
Not necessarily.
Okay.
But as a matter, practically, you have to prove either by your birth certificate or by certain proof that this is really your son, not somebody else.
So, but if it is somebody else's son,
and you cannot. Let's say if this the son, you have another son under your name, under your surname, but it's not by a second wife that is not from legal marriage. Okay, and then you have when the claim. When it comes to claim that the relationship that this is,
so could you show that, just for argument's sake, that you can show your marriage certificate between you and the mother,
no problem.
And the mother can show the birth certificate of the son with her name?
You mean from a legal wife or not legal wife? Not legal wife.
It's a legal wife, but it's a second wife.
Well, legal wife is always no problem. If your wife passed away, you have a second marriage, it's legal marriage, no problem.
There's no problem. And she's had a son from a previous relationship.
Okay.
So let's say I marry somebody who already has a son. Let's say my wife passes away and I marry somebody who already has a son from a previous relationship.
And if she is a minor, you can.
If the son is a minor, then I can show the marriage certificate between me and the mother.
And no matter who is the real father, it doesn't matter. Because you become the legal father.
Okay.
But if it's a second wife or midwife, or because it's a second wife from China, you have to prove that you're the real father.
Okay.
Time came.
I understand.
Either by your certificate, registration, whatever. And I'll explain more about the insured interest. Not just related to direct family. Sometimes, let's say you're a banker. If you borrow a loan from your banker, and because the person dies, the bank will suffer some loss. The bank can insure your life. individually or in a group, by credit line policy, by individual mortgage policy. Debtor-borrower relationship. And if you're in a partnership, in a business partnership with your partners, and if your partners has an insurable interest on your line, they can buy an insurance company, buy an insurance policy on your line, and they get listed on the debtor. But if you have no relationship, you can, an employer can buy insurance for employees because it's your interest. And that first was very important. An insurance agreement is void without insurance interest. So if you buy the policy for your son and you cannot prove that it's really your son that's interested in the insurance is void, the insurance company will refund. Okay, impossible. All right. Legally recognized relationship. The policyholder is the legal owner of the policy. The subject matter of insurance, we call the target of the insurance, can be a person, can be a property, some picture. A legal. A property that you owned or antique you own can be a property, can be your liability. You can insure it of your legal liability as a homeowner, as a director of the company. You can insure your liability, director's liability. You can insure your legal rights. Financial losses. Let's say I'm the homeowner, I'm the chairman of my homeowners committee. I insured my liability as a chairman of the homeowner committee because something that I do with negligence, then I would not be sued. The insurance company can cover me the expenses or in terms of in case of litigation. Okay. So, but I have to be capacity to be insured, and the subject matter of the insurance has to be one of these only. This is a simple chart showing that your own life, your spouse life, you have insurable interest, your child under 18 years old, or your child under guardianship. Guardianship is, for example, if you have somebody else's daughter living in your house and you take care of him or her while she's studying in Hong Kong, then you have guardianship, you can insure her life for indemnity, for injuries, for physical risk to her body. Insurance of property, physical things, like a car, like a premises, like ownership, like a mortgagee, like a bailey. Bailey is something you take care of, provide hostage of the goods in your premises, in your office. If you have a bailey of it, you have insurance with. Direct or indirect primary liability, and the causes liability is insurable. Legal rights have a legal position due to loss of income. Let's say the employee benefits, employee sicknesses, you can insure about that. Employees labor insurance, for example, can insure about the legal liabilities of the owner when the employee get hurt during his employment. When is it needed? And for life policy, the insurer interest is needed at the policy inception when you buy the insurance. But for marine and damage insurance like car insurance, you do not need insurable interest at the time of purchase. Right. But when you claim, you must prove you are the owner of it. Right. Because the title of the car, the title of goods will change hands at any time. All right. Persons involved in insurance contract, you as a policy owner, and the insurer, and there is insured, the insured person, the insured object, and a beneficiary. And the beneficiary has no claim to the ownership of the That's a beneficiary. There's no claim. You cannot. I don't want to be a beneficiary. I do not need it. But the policy owner has the legal rights. He can assign the policy to another person, meaning transfer the title to another person. Transfer it to me. And you do not need AI's approval of that. Because I borrow from me alone, I can assign my policy. If I pass away, money will give it to you instead of me. Assigner and assignee relationship.
Right.
Type of assignment. Assigned to the insurance contract. Assignment to the insurance proceeds. The whole contract, assigned to the proceeds. Okay, another principle. This is the insurable interest, the knowledge you need to know about insurance interest. That's the second part. Is good. The principle of utmost good faith. The insurance contract is an utmost good faith contract, meaning that each party is under duty to review all the vital information. I cannot hide anything, knowing that this information will affect whether this contract is to be enforced, to be valid, or to be very practical. My health situation, I cannot tell lies. I cannot hide my health situations.
Okay.
Purposely, intentionally don't tell the insurance company. And that is a material fact. And that will make the contract voidable. So it is utmost good faith. If I'm the agent, I know that you have certain sicknesses. From my knowledge, certainly you have a linked hand, linked legs. I do not tell the insurance company that I'm violating my utmost good faith. So each party has this utmost good faith responsibility.
So can I ask you something? Let's say you enter into a life insurance and you pass away, and the beneficiary is supposed to receive the claim. They're supposed to receive the benefit, but the insurance company says that this was there was not utmost good faith, and the person lied on about a previous condition that they had, and then it becomes void. But the person has already passed away. So if it becomes void, who do they pay the policy? It's not a benefit, but if it's void, then they get paid back the money that they put in.
The beneficiary will not get the money at all. This is called a voidable contract because you're
So when it's voided, you mentioned earlier that if it's voided, then the insurance company pays the premiums.
Refund all the premiums.
So who would get the refund of the premium?
Or whoever the owner of the estate.
The owner of the estate.
Yeah.
Okay.
Refund to the owner of the estate. Your spouse, could be your children, could be anyone under legal estate law. It's most unfortunate that happens because the let's say you're the person, you hide certain health information after 3 years. After 2 years, for example, you died because of the sickness of the company. And for sickness, I think for life insurance, whether you're sick or you died of sickness, died of accident, died of health situation, doesn't matter at all. But if it's a medical claim, then it becomes the issue. And when you make a claim, let's say I have a critical illness, I have cancer. If this is 2 years period, and I did not tell the insurance company at the time I purchased, I already know that I have cancer. I did not tell the insurance company, and the insurance company found out. So this becomes avoidable. It's a fraudulent representation. You mistreat, fraudulently commit the fraud to the insurance company.
Right.
Yeah, and the contract is not enforceable. Right. The best thing you can do is to refund the policy. So it's very important. The facts, what is material facts? Material facts is this is legal definition. Concerns whether to accept or reject, or whether you're setting the levels of the premium. It's a concern of both parties, requiring both parties to declare utmost good faith. So material facts, remember, two conditions: either to accept or reject, or the level of premium to the individual. Anything affecting these two factors become material. And if you have misdeclared your birth date, it's not material. Because if you are presenting yourself younger than you were, you do not present your ID birthday right, material, because at the time they claim they will recalculate your actual, recalculate the premium and calculate according to the last known actual birth date and calculate the premium and the proceeds.
Right.
This is not a material fact, but if it's health conditions, it's a material fact. If you have fitted family medical history, you did not tell the company, this material.
Right.
The duty of disclosure is the proposer and the insurer. The insurer has to tell you the material facts, the certain conditions that have these policies. For example, you have a 21 days of cooling off period, then you have a term called incontestability, this term of grace period, and after certain days your policy will be lapsed. And these are material facts that the insurance company have to tell you. The agent has a responsibility to tell you these facts.
Right.
Common law. Material facts not counted for full knowledge until the contract has been concluded, do not have to be disclosed. Such a claim to be notified while renewal. Require the disclosure of material facts changes risks happening during the currency of the contract. It affects about the, let's say, a household policy. And if there is any change in the factors of the household, then it will the insurance company time of renewal. Fraudulent representation. Intentional misrepresentation by either side is a fraudulent non-disclosure of certain material facts. But sometimes it's non-fraudulent misrepresentation. Let's say I misrepresent my birth date, I misrepresent my job, and it's not material facts, and the company will just affect, it will just
Right.
the premium and the benefits accordingly. And it's non-fraudulent, non-disclosure, it's nothing, it will not affect the contract at all. So if the breach of the utmost good faith, the insurance company will waive the breach. So there's this tradition in the contract, there's a 2 years of incontestability, meaning that if you have misrepresented anything, something important, and after 2 years, the insurance company cannot cancel the contract because you hide this information to it. I cannot contest that the contract is void after 2 years.
Okay.
If this is not fraudulent. If it's fraudulent, no matter how many years, it is still a voidable contract.
Right.
And I can sue damages for fraudulent and negligible misrepresentation. Let's say if I ask you to buy a contract with AIA and misrepresented questions, you have claims, all sorts of situations, and represented that, and you believe in that because I represent AIA, you believe AIA is doing that, and if at the time of claim they decline the responsibility, then you can sue me. Then I can sue me too, because I represent by fraudulent representation to me as an agent. Okay, the third principle is the proximate clause, meaning the cost of the loss, because sometimes there's a lot of reason for the, let's say in the goods insurance, like fire, and we have some examples. Insured peril, fire under fire policy, or let's say you insure for fire insurance. So meaning that if there's a fire in the house, fire in the factory, the insurance company can indemnify you for the losses you incurred. But it's a fire, not by your house, but by your neighbor. And the firemen try to put out the fire and then pour a lot of water that damage your goods in your premises. And the direct cause of your damage is by the water, not by the fire. But because the reason for that water is fire, it's still an insured cause of risk.
Yeah.
You can still claim, although it's damaged by water,
Right.
flooding, not by fire. The cost of the insurance, the cost of the accident is fire. But if it is not, if it is a war, as a riot, like many months ago, but it's a riot, and people throw gasoline boxes into Maxon and the restaurant, it burns the backbench restaurant, and the root of the cause is riot. That is not insured. Got it. Although it's damaged by fire. So this reason is very important, affecting an insurance peril. There's a flare, it's raining, it's unrelated to your risk, and you're not covered. So, for a single cause, the cause could be excluded, can be an uninsured cause, there are no claims. And if there's a fire out of an accident fire, out of is a fire policy, it's accident fire out of water damage, is an insurable cost.
Right.
And if it's a careless act of insured by case of fire, it is an insured cost, but is a careless act of the insured himself. He didn't turn off the gasoline, then it's an insurable cost. And so that's the principle is very important. Taking too much time? What time is it? 25? Okay. We should finish this part soon. Application of principle apply to all classes. Policy modification. There is a certain limit whether this claim can be made. So it's a loss approximately caused by delay that can cause by risk insured against. Indemnity. Another principle is indemnity. Indemnity is the exact financial compensation for a loss, no more and no less. Oh. Indemnity is different from benefits. Your life insurance is not indemnity because the life is priceless. So it's a benefit. Let's say you insure for your life for $10 million. That's not indemnity. It is a benefit. So give you $10 million. For indemnity, for car loss, for household property losses, you cannot recover more than your loss.
Right.
The car insurance, you cannot have claims that is more than your loss, actual loss.
Right.
So indemnity, there are four ways to indemnify you. They can just by pay you by cash for your losses, can help you to repair to resume positions without any benefits, actual cash. It can reinstate your building, let's say you're a fire property, you can reinstate the walls and the bricks, and you can replace it with a new one or a similar new one. You have a car, replace it with the same age of car, can do four things to indemnify you. Salvage. Salvage is the damage something left on the damage subject to matter of insurance. So after the insurance, that is the remaining value of that damage. And it's more relevant on the marine insurance.
Right.
This is your total loss, and this is kept by the insured, pay you A, and you keep the S part as the salvage. From the salt, this part that you have lost. So is it something that easy to understand? You can understand it?
I think I can understand it. I think I just need to do a little revision. And
all right.
I think it's quite easy to understand.
Very good. This could become a little bit complicated because there were questions about this. The amount of insured and the losses actual, and who is to accept which part of losses. there are 4 ways of indemnity: new for all cover, agreed value to marine policy, and restatement insurance. And we can look at an example. So the property value is $100, 100,000.
Right.
Policy fee value, face value is 50. Loss incurred 30,000. Loss, payable loss. And this is a total loss amount. And the insurer payable loss is this amount. So this is a savage part. The insurer person absorb the loss himself. So only 50% is because it's spot. This is called underinsured. The property's value for 100,000. The insurance coverage should be 100,000.
Right.
But they only insure 30,000, 50%. So in terms of losses, actual losses only paid up to 50%.
Okay, I understand.
Okay, good.
But can I? Sorry, maybe I don't understand. It's saying the loss amount is the full amount, which is 100,000.
No, the loss amount is 50,000. 30,000. This is 30,000. 50% is recoverable, indemnified by the insurance company.
I understand that.
Yeah.
I understand that the policy is only 50%.
Yeah, this is 50%. This is 30,000. The loss is 50,000.
So the loss value is 30,000.
Yeah,
and
the property value is
100,000.
100,000.
Basically, because it's 50%, or because you've only insured for 50% of the value, because the loss value is $30,000, you have to also take 50%.
You're self-insured 50%. And
but that's a little unusual, isn't it? I mean, if you have said I'm valuing my policy is for 50,000, then shouldn't you be able to get back up to 50,000?
you could, but many people try to save the premium, and they're not fully insured.
So you're saying you have to take the full value of the property
if you want to get full. This normally happens in your household properties, your marine goods. You would not fully insure the amount. You take chances.
Okay.
For 50%, only 50%. So I'm lost. I'm not willing to. And there's a total loss. Deductible. Deductible is that you're out of the total loss, certain amount of the deductible. You claim this, you accept the amount for the deductible part. The insurance company only covers the amount above your deductible. Another concept is called franchise. And this will also appear in your exam paper.
Okay.
If there's a 5% franchise, meaning that if it's below 5% loss, no pay, no indemnity. But if it's above your franchise, full pay, full amount of insurance.
Okay.
Okay. Policy limit, and it's also a limit. It's something different from your deductible. Let's say you're in your medical insurance, you have a deductible of $10,000. So the first $10,000 will be absorbed by you. After $10,000 and up to your policy limit, let's say 50,000 will be paid by the insurance company. About 50,000 you pay from your own insurance. That is the deductible, policy limit, and the self-insured.
I understand.
And this two concept contribution, when you have multiple insurance on the same property, then each part will contribute on percentage of the insured amount to your claims.
Okay.
Irrigation in a car, insurance. Let's say you hit someone, damage someone else's car, and I, being the sufferer, seek indemnity from my insurance company. then the insurance company take over my place. Instead of me to claim the person, that is called subrogation.
Okay.
So policies, contribution, percentage, and contribution, and this will be all. You always see this in explanation. They often ask you.
I'll go through it.
Yeah. Let's see if any. Okay, 3 is okay. Some more explanations. Okay, chapter 4 and the rest I will let you to read it. This is basic knowledge. What the insurance company do, how does it do it, general purpose, legal responsibility of each part of the insurance company.
Right.
Basic knowledge.
Okay.
Reinsurance, Hong Kong federal insurers.
What about reading?
Also let the school person.
Can I just use the toilet?
Yes, please. Where this?
No.
I'll show you.
Thank you. Oh, good.
Okay, we have completed first part of the paper 1 presentation. Then we are going to look at some of the exam paper mock questions. And I'll stop here and start another video again.